Good afternoon. This is the Global Stock Investor Show. Welcome, global investors. Today I'll be going over the last part, which is part four of primary dealers with the Federal Reserve Bank of New York. I'm gonna give you guys four primary dealers, but before I go into that, pretty much I label myself as a financial engineer. Pretty much, I have at living by I'm formulating principles to in investing, pretty much a formula, a recipe. And I've just noticed like a lot of YouTubers, I commend them for a lot, but I just feel like a lot of them, their style, they're just picking stocks that are pretty much big names and they don't have any like principles or any value towards like their their vision in their strategy investing in the stock market. So my journey pretty much is just every day I'm growing. So this is pretty much another growth spurt that I'm gonna give you guys and what I'm realizing that it's just hitting me today. And pretty much I'm a Robinhood investor all the way. So I use an app called TradeBase. I'm gonna shoot it when I get to California. I'm gonna start shooting videos on my phone because I'll be back in school. So I'll be a full-time student again, but the videos won't stop. But I'll be more going over my portfolio. Pretty much, my portfolio, my assets under management are. My strategy is every month I'm dedicated to invest 1,000 a month into the stock market, and my breakdown is going to be pretty much my principles, uh, pretty much for 2019, and each year I'll switch them up just to see how my portfolio grows. So pretty much with 1,000, 600 of that, which is going to be 60%, is into individual stocks. $300 of the 1,000 is going to go to index funds, which is 30%, and then 5% bonds ETF. I deduct $50 out of that 1,000, and then the remaining $50, I'll invest 5% in REITs. So pretty much that's my formula for 2019, and my principles, and I'm going to stick to it and see the growth. And another thing, um, when you're looking at YouTubers, I don't know why they go through the days, weeks, months, 3 months, possibly a year, but pretty much now it's all about the all, and what your pretty much your percentage right here. Pretty much this is the number that is the main focus. It just hit me today, and I just noticed a lot of YouTubers. I feel like they're lost. They're just like, well, look at my one day, 1 week. This is all just, I mean, it's all up and downs. Like this is pretty much what you want to look at for portfolio. So I'm gonna show nothing but alls, and then that's how I've been showing it. But um, pretty much from this is going on second year, so pretty much I'm 3.35% um, from going on the beginning of investing till now. So the all shows, the 3%. So 2018, for that year, the average was 3%. So this year, I'm going up to 6%. And then with this time, as you can see, this drop right here, um, it was because I was heavy in stocks. I was uh, about 95% stocks. So stocks are so volatile. That's why I hit that dip. So a negative 8.51. So next year, when we go through another bear market, or another correction like that, I'll be more prepared. I'll be weighted down with index funds, bonds, ETFs, and REITs to keep me more afloat. So, and then I'm only 60% stocks into my portfolio, and so because of the volatility, I know, when stocks get hit, they get hit. Everybody feels it, even index funds, but index funds don't feel it like an individual stock. So pretty much my index funds are going to be there to pretty much balance me. And I feel like I'm learning, like I'm balancing my own boat out to sea, um, going from one end of the earth to the next, to the pretty much around the world. So these are just principles and pretty much concepts that I'm coming up with, and just doing something a little different than other YouTubers. Like my hats off to them though for starting a channel. This is difficult. It's not easy. Another thing, commend their courage for investing. That's probably another hard thing to do. So my hat's off to them. But a lot of them, they get to a point where they're just talking about stocks and they really don't have pretty much a formula of principles. They have principles, but they're like pretty much going along with the fad. They're not their own personal, how they really feel about the economy, and that's what I'm on. I'm pretty much on the concept and how I'm formulating how the economy is moving and how to grow it. So pretty much, so that's where I'm at. For my all, I'm at 3.35%. That's, I mean, I'm making my money grow 3.35%. You can find that anywhere else. Let me know. But this year, 2019, it's about 6%. So every year, I'm just doubling it. To see if these principles and concepts, how they make my portfolio grow. So um, that's just a little rundown on 2019. Let's jump into it. This is primary dealers with the Federal Reserve Bank of New York, part 4. This is the last part. Tomorrow I'll be doing the finance sector. So pretty much a primary dealer, for any of you guys out there that don't know what a primary dealer is, a primary dealer is a firm that buys government securities directly from a government with the intention of reselling them to others, thus acting as a market maker of government securities. The government may regulate the behavior and number of its primary dealers and impose conditions of entry. Some governments sell their securities only to primary dealers. Then some sell them to others as well. Governments that use primary dealers include Belgium, Brazil, Canada, China, France, Hong Kong, India, Italy, Japan, Singapore, Spain, the United Kingdom, and the United States. And this is pretty much why I call my channel Global Stock Investing, because the money, once you know how to make the global economy work, you pretty much know how to form the world like Voltron. I don't know if you guys are Voltron fans out there, but that's how I see the world, pretty much connecting all 5 lions together and forming Voltron. So, and in one market, yeah, like the United States is pretty much the head, the black lion, but you still need the yellow lion, the red lion, the blue lion, the green lion. So that's why when you get the Voltron, that's just other concepts that I'm coming up with. Okay, as you can see, you could read this primary dealers in the United States. I'm going to read over a little concept to give you guys. The primary dealers form a worldwide network that distribute new U.S. government debt. That's key. For example, Daiwa Security and Mizuho Securities distribute the debt to Japanese buyers. As you can see, the debt in the U.S. gets pushed out. These two companies distribute to Japanese buyers. BNP Paribas, Barclays, Deutsche Bank, and RBS, Greenwich Capital, a division of the Royal Bank of Scotland, distribute the debt to European buyers. You see that? Those entities distribute American debt, U.S. government debt in the European market. And then you have Goldman Sachs and Citigroup account for many American buyers. So we're pretty much Americans. We know pretty much those names. And then these are the current primary dealers with the Federal Reserve Bank. So I pretty much gave you guys, this is part 4, so this is the last part, but I've broken down each of these banks for you guys to go and invest in Robinhood. Some of them are in Robinhood, some of them are not, because you have the European buyers, then you have the Japanese buyers. So some of those are not listed on Robinhood, but I'll say 70% of these are on Robinhood. So that's the primary dealer. Okay, let's go back here. Okay, the first primary dealer is RBC Capital. As you can see, it's not listed on. It's called RBC Capital Markets, but it's not listed under Robinhood. But it operates under Royal Bank of Canada. As you can see. Okay, let's look at the 5-year. You know how I feel about banks from Canada. As you can see, upward trend, peaked around $86.13 on January 19, 2018. Current market price, $76.54. About Royal Bank of Canada engages in the provision of banking and financial solutions. It operates through the following segments: personal and commercial banking, wealth management, insurance, investor and treasury services, capital markets, and corporate support. The personal and commercial banking segment deals with a broad suite of financial products and services in Canada. The wealth management segment offers a comprehensive suite of investment, trust, banking, credit, and other wealth management solutions to institutional and individual clients through its distribution channels and third-party distributors. The insurance segment refers to a range of life, health, home, auto, travel, wealth, group, and reinsurance products. The investor and treasury services segment comprises of asset services and a provider of cash management, transaction banking, and treasury services to institutional clients worldwide. The capital market segment covers banking, finance, and capital markets to corporations, institutional investors, asset managers, governments, and central banks around the world. The corporate support segment consists of technology and operations services. The company was founded by J.W. Merrill, Edward Kennedy, T.C. Kinnear, James B. Duffus, William Kennard, John Tobin, George P. Mitchell, and Jeremiah Northup in 1864 and is headquartered in Toronto, Canada. Global stock investing. The current CEO is David Ian McKay. Employees 84,000. Headquarters Toronto, Canada. Founded in 1864. Been around. Market cap 110.13 billion. Large cap. PE ratio 11.76. Dividend yield 4.01. Buy 67%, hold 20%. Those two together, more than 75%. So that's the first primary dealer. The second primary dealer is Societe Generale. As you can see, they're not listed on Robinhood. So a little background information on them. Societe Generale SA, often nicknamed SocGen, is a French multinational investment bank and financial services company headquartered in Paris, France. So that's the reason for that's a company, and I've noticed a lot of companies in France, they're not listed on Robinhood. One share of Societe Generale SA is 26.48 euros, which is equivalent to $30.35. The dividend yield for Societe Generale is 8.31. So if you guys want information on that, and if other brokers have this company for sale, it is a primary dealer with the Federal Reserve Bank of New York. Okay, the third primary dealer is Merrill Lynch. Take that out. MERR. So Merrill Lynch is not listed. It pretty much Merrill Lynch operates under Bank of America. So let's type in Bank of America. Took it to 5-year. Nice upward trend. Peaked at $32.72 on March 9, 2018. Current market price $28.39. As you can see, I bought one share for $30. My current equity is $28.39, which is I'm down $1.61. About Bank of America Corporation, also called Bank of America, is a multinational banking and financial services corporation headquartered in Charlotte, North Carolina. It has a retail banking footprint that serves approximately 46 million consumer and small business relationships. The current CEO is Brian T. Moynihan. Employees 209,000. Headquarters Charlotte, North Carolina. Founded in 1904. Been around. Market cap 274.41 billion. Large cap. PE ratio 10.85. Dividend yield 2.91. Here's some information on Merrill Lynch. Merrill Lynch Wealth Management is an American wealth management division under the auspices of Bank of America. Along with Bank of America, Merrill Lynch, the investment banking arm, both firms engage in prime brokerage and security dealings. The firm is headquartered in New York City and occupies the entire 34 stories of 250 Vesey Street, part of the Brookfield Place complex in Manhattan. Merrill Lynch employs over 15,000 financial advisors and manages 2.2 trillion in client assets. So there you have it. If you guys want more information on Merrill Lynch, there it is. Merrill Lynch operates under Bank of America. So if you want to invest in Merrill Lynch, invest in Bank of America. Okay. Last but not least is Cantor Fitzgerald. As you can see, this also is not listed on Robinhood. It could be listed on other brokerage accounts. Cantor Fitzgerald is an American financial service firm that was founded in 1945. It specializes in institutional equity, fixed income sales and trading, and serving the middle market with investment banking services, prime brokerage, and commercial real estate financing. It is also active in new businesses, including advisory and asset management services, gaming technology, and e-commerce. It has more than 5,000 institutional clients. So pretty much, as you can see, Cantor Fitzgerald is in the industry in banking financial services, founded in 1945, headquarters New York City. Pretty much, this is not listed on Robinhood, but it is a primary dealer with the Federal Reserve Bank of New York. So if you guys want to invest in them, they're not on Robinhood, but they could be on other brokerage. I'm not sure. They could be, or they could be a private company. So, and that's pretty much the breakdown on all the primary dealers with the Federal Reserve Bank of New York. In conclusion, I go to the all. Always look at the alls. I'm gonna repeat that every show. Always look at the alls. Alls tell you from when they started till now what their percentage is, and that's what you got to look at. Because that's what, for the longest, I wanted to stay over here in 3 months. I was like, ooh, because they're just so much higher. Look, see, I mean, to me, this is where you always want to look at your alls, so you can know how they're investing overall from beginning to end, cumulative, your entire time investing. That's what you want to look at, and that's what you want to grow. You want to grow that 3.3. I want to double. 2019, it's gonna hit a 6, and if I get higher, cool. But I'm always doubling, so I hit a 6, and then I do 6. Then I want to go how to double a 6 into a 12. 12, or if I can't double it that quick, then I'll just start just doing another 3, which will be from 6% to 9%. But I'm gonna do that annually, so I can look at the market and observe it and find different recipes, and not just closing my eyes and just be like, oh, I want Google and I want and Nvidia, and oh my God, it's crashing, and I got people are it's just buy a share. There's so many stocks out there. I see people just go and they just unload on one company and put all their money into one. Like, what if that one stock, it goes out of business, and you buying all those shares? That's what my channel is. feel the market. Feel what these companies feel like. Feel the dividends. Feel these chickens laying these eggs. Feel it. Feel it. You gotta feel it. So that's pretty much what I'm on. Just feeling the vibe and energy. Like, collecting companies. Look at this. I mean, it feels good to have them. And know what they are. Um, and these are 70. And I just share it. I'm building up the foundation, the pillars. You know. Once I see how they're laying eggs and everything, then I'll start doubling up. I don't double up on anything. If you see doubles, that's the very first time that I invest in the market and I had that mentality. See, Sony. Um, these two right here were given to me from Robinhood, Steel, and then Chesapeake Energy. So those are, and then Dunbury Resources, another energy. So pretty much, I mean, and I'm building my foundation, and you could feel the ride better because you're pretty much invested in sectors, and every sector holds up the economy, whether it's the material sector, which under materials you have cement, wood, and then steel, and then you have technology, finance. I'm getting that in tomorrow. You have the supermarket, you have home improvement sector, you have holding companies, company that's just holding companies. That's a sector that I made. You have REITs, you have index funds, um, you have bonds, ETFs. So all these together, you gotta balance them. Each pretty much each slice of the pie. If you know how to if you know how to balance them right, it's gonna make you grow. Whether in an up market and especially in a down market. So, and I know that's what we all look for. We look for when the down market comes, how do we stay afloat? And what I'm learning now is, because I was going in on just buying individual stocks. Now my strategy is to add in index funds, bonds, ETFs, and then REITs. To cover that 40%, and then 60% I'll still stay in individual stocks. So until I get probably my first. Well, I look at once I get my first 100 stocks, then I'll look at it like look at the fluctuation. But if because I'm really looking at my as you can see right here, my 3.35. So I want that by 6% by December, and if it goes past that, even better. But I just want to learn to keep it at a right balance. So 6% 2019 for December. So then once I hit that, I'll see if I can double it to 12. How confident I am, just based on my confidence and my experience. So whether I double it and go from 6 to 12%, or go from 6 and add another 3% and then go 6 to 9%. In conclusion, RBC Capital Markets, which operates under Royal Bank of Canada, is $76.51. Dividend yield 4.01. Societe Generale from Paris, France, is one share is 26.48 euros, equivalent to $30.35. Dividend yield 8.31. Merrill Lynch. Merrill Lynch operates under Bank of America. One share of Bank of America is $28.36. Dividend yield 2.19. Last but not least is Cantor Fitzgerald. I'm thinking they're private. They're not under Robinhood, and I tried to find out if they had stock. I didn't find any information, so I'm assuming that they're private, and that's the case. Pretty much for them, I didn't find them, but Cantor Fitzgerald is a primary dealer with the Federal Reserve Bank of New York. Outro. Subscribe to the channel. Comment any questions or recommendations you have. Like if the content was inspiring for you, and share this information with other global stock investors. While you're slaying dragons, I'll be taming them.